And then this is another one that we did the last earnings cycle. This was on AFRM, AFRM. This was another one just set up. This was an earnings alert trade sent out. This is typically what it looked like. It's my alerts that I send out. If you do want to take the earnings package, they're very detailed. So if you've never even traded earnings trade, you can go through and read my detail of the earnings that I send out for the trade, and you could actually fall and just do the trade without actually having to know how to do it. But anyway, so very detailed there. Use what I call Telegram to send these out. It goes out within seconds when I put it in. And here it was the next day. So, you know, set this up. It was trading at, we'll go through where it was. It was trading at down here at 80 or something. And then the next day it spiked up and it was trading around 94. So we had a max profit on this the next day. So here's the trade set up on AFRM, and you'll learn how to, you know, find these stocks like AFRM next weekend at the actual workshop that we're going to be doing this in. So here it was, just kind of the data to give you an idea. This has potential for big, huge movements. Specific screen I look for greater than 6%. So you can see here the potentially big moves, and this is what it's done historically. Big moves, up 10%, down 14, up 21. Here's the small one. Here's the big 31 up, 9.5 down, 10 down. So it has potential for huge moves up or down. So that's what we took advantage of, that probability. And you can see here just kind of the earnings data that I put down here on this little spreadsheet. You can see the typical implied moves over the 5 series has been 14.2% up or down. And the actual movement at expiration over the 5 series was a move of 16.7% up or down. And over 9 cycles, a move of 16.32%, the smallest move over those 9 cycles was 4% down. All right, so just potential for these big price spikes up or down. And so we did this with this specific trade here. So it's trading here going into the close on Thursday, had this huge spike up, but then, you know, moved down, but still a big move. So went from 80 on the close Thursday, trade at 88.45 into the close on Friday. And so we set up this specific structure to take advantage of this type of potential price spike. So did this trade here. So we had the 83.85 right here. So all it had to do is close above 85. And then we had the 77.75 R close below that. So I had the big price spike up, closed here at 88.45. We needed to close over 85 here. It did that. We kept the full $50 on the spread. We had the risk of 200, lesser cost of the trade. 150 was a risk. $50 on 150, 33% return on that trade. So that was a pretty cool trade. And this was again a alert trade there.